Good morning, I'm Chris Swift. Welcome back to Market Day Report. We have got a Friday here in front of us and looking forward to the weekend, seeing how the prices are going to trade today. And let me tell you, they were wild yesterday with everything showing some pretty lower prices. Let's see how we're going to start this morning. In the overnight session, we traded down 3 on the December corn at 471 3/4. March contract down 3 1/4 at 490 even. Out to the July down 3, 508 1/2. Our beans lost quite a bit of their premium yesterday, now back underneath 14 for some of the months. Got January beans down 7 3/4 at 1352 1/2. March down 7 1/4, 1367 3/4. Out to July, 1381 3/4, down 7 1/2. Our wheat market in Chicago been a little bit softer too, and I'm almost positive some had new contract lows yesterday. December at 550 1/4, down 3 1/4. March down 3 1/4, 577 3/4. New crop July, 606 even, down 4. Hard red Kansas City wheat is lower as well, down 6 1/4 on the D, 621 even. March down 5 1/2 at 630 1/2. And July down 5 3/4 at 642 even. We'll wrap it up with our spring wheat this morning. Minneapolis down 5 1/4 on the D at 720 3/4, hugging the low of the day. March down 3 1/2 at 737, and out to July down 3 at 753 1/4. I got my guest Brian Hoops from Midwest Marketing Solutions this morning. Brian, I hope everything is well on this Friday to you. And I got one question. We have seen soybean meal perk up and set new contract highs over the last couple of days. We know it's hugging right underneath that $500 level. What is the demand for the meal? Where is that coming from?
Good morning, Chris. Yeah, you're absolutely right. Soybean meal contract highs, as you mentioned in your commentary. Some of the wheat contracts pushing the contract lows yesterday. Corn hovering near those lower range of the lows, but soybeans and meal have been moving higher. A lot of it is coming because of the drought that happened a year ago in Argentina. It extends into this year because there is virtually nowhere else for world countries to buy their product from this year. They have to come into the United States and buy soybeans to crush into soybean meal, or just outright buy meal from the United States and have it shipped. And that demand, I think, does continue through the month of November to December into January before South American and specifically Argentina supplies become available. At that point, then we can start to see that demand start to shift back to some of these countries. But right now, with ending stocks tight in the U.S., less than 250 million bushels. We have good demand for soybeans recently, very good demand for soybean meal. And I think that's going to be a supportive feature, especially when you start talking about dry areas of northern Brazil and maybe some areas in southern Brazil that are receiving too much rains. And you're talking about a lot of replanting of both corn and soybeans.
All right. So in the corn market, we know that a lot of times we deal with the farmer trying to get him to market that product. But there's also the flip side of that for the procurement of it. And we know that there's a lot of people out there having to procure. And we see corn prices down at these levels. Is there something maybe specific that someone looking out into the first of the year can do to maybe hedge some of this corn prices while it's still low at the low end here?
Yeah, the thing that you probably want to look at doing this year is if you are in an area you can buy some cash product right now while the basis has been wide at harvest. That's the first thing you want to do is lock in the cash product at a wide basis. If the basis is already narrowed or you're needing a product into the spring, then you want to look at maybe some option strategies because, there's not a lot of upside potential unless we get into a weather threat for the corn market to move sharply higher. You could have 20, 30-cent rallies, of course, maybe 40-cent rallies. But a big move, you want to protect against that. And using options is a great strategy to do that. You can do some calendar spreads. You can just do some outright spreads where you buy a call, sell a call type of strategies, maybe even sell puts. A lot of different ways to attack that. But it gives you a lot of flexibility if you're holding options. It gives you that, exactly what it says, gives you the option to buy at a certain price level. And if basis widens back out in your area in the spring when you need the product, you have that flexibility to convert it into cash. So a lot of really useful tools out there for the farmer to take advantage of.
Absolutely. Brian, I certainly do appreciate that. I know that we do get a lot of opportunities for the farmers in both aspects to it, but for the procurement, we kind of tend to be a little bit less on that, but I know that's a very important aspect to it. Brian, stay with me. We're going to go away, take a commercial break, and we're going to come back and talk with Brian Hoops on the cattle market. Stay with us. And welcome back to Market Day Report. Let's take a look at yesterday's closes on the cattle market and kind of get an idea where we're going to start at this morning. Unfortunately, we were quite a bit lower yesterday in the fat market, down $3 at 174.75. Feb down $3.45 at 175.32. Out to the June contract, down $2.82 at 172.20. And those cattle followed a lot of the other commodity markets yesterday that were lower. The feeder market, the November down 5, that was last trading day yesterday. They'll settle that contract today to the feeder cattle index this afternoon. The Jan contract was down $3.40 at 227.50. That's just right underneath the index at 228, I think either 85 or 35, but it's right around the 228 area. March down $3.40 at 230.10, and the April down $3.60 at 233.70. Our hog market had reversed from a lower trade and ended up 42 on the December, 71.47. Feb up 72.5 at 75.62, and April contract up 20 at 81.45. I'd like to ask Brian Hoops to come back in here with us for just a few minutes and talk cattle. So we've seen some enormous price movement in the futures market, and now we're kind of see the cash market relate to that. Are we in for a couple of weeks of just convergence of basis until we get the December time frame out of the way?
Yeah, we may be, Chris. It looks like the cash trade this week coming in a couple dollars softer on a live basis, about $5 weaker on a dress basis. So weakness is what we expect in the cash markets. Probably looking at that again next week. Packers will have a holiday short and kill week with Thanksgiving next week. So, it's going to be limited as far as futures trade. It'll be limited cash trade as well. And I think they use that as a way to try and regain some of their lost margins. They're still looking at about $75 a head. A loss for each animal that they kill. So not real excited right now about, really increasing those kill schedules at this point in time. So the futures really sold off hard yesterday. It's been a very volatile market. They probably will try and recover some of that today, but you wouldn't want to expect that we're going to go push to new highs or anything. We just don't have the fundamental support at this time, and you don't have the funds stepping in and buying this market either. So, you get some short-term swings in this market right now. That's probably the best we can hope for, is this choppy, really choppy trading affair where you're right, the convergence between December futures and the cash trade happens, but December's holding pretty deep discounts. So I would think you'll narrow some of that discount in the days or weeks to come.
All right. And today's cattle on feed report is going to come out too. Are you looking for about the same thing? I think you're looking at placements around 106, something like that, and on a feed number about 101.9. Do you kind of agree with that or see something different?
Yeah, we're in line with that, but a little bit larger. The numbers we submitted were closer to 108 as far as placements go. So certainly could be off on that. But looking at, we're probably going to see a little bit larger placements of cattle in the feedlots. Now, we saw record low placements a year ago, so maybe those numbers are going to be skewed just a little bit from the standpoint that we had very small marketings or small placements last year. We're going to increase them, but we're still probably going to be below the 4 or 5 year average as far as placements go.
Yeah, I tell you, it's always something out there. Brian, certainly do appreciate you taking the time to be with us here on this Friday morning. It's Brian Hoops. He is with Midwest Marketing Solutions. And Tammy, we're fixing to hear the opening bell and get things ready to go. So I'm anxious to see it and see what's going to go on today. So there's a lot of price fluctuation.
It's been a busy week.
It has been, and a lot of information has come out. So, we've got a lot of things have to hash through.
We do. Yeah. All right. Well, we're glad you're here.
Thank you. I appreciate it.